We are live. Roy, welcome.
It's not saying live on this end. Is it live?
It's what the fuck is going on, dude? Okay, now we're live. I hope
Yay.
we're live. Man.
StreamYard.
Yeah. For context, StreamYard rolled out some new features and we're the guinea pigs, apparently. Yeah, we're live. Okay, great. Fantastic. Thank you, Trey. How's it going, everybody? How's it going, Roy?
I am well. Glad to be here on a Tuesday. Lots of news to talk about. Still in the middle of earnings season. How are you, Travis?
I'm doing good, man. I'm taking a look at these at Apple's new product. Did you see Apple's new product?
I did not.
Yeah, iPhone Pocket. It's apparently a sling. This is not a joke. This is a real product from Apple. You can put your phone in it, and yeah, you have stylish colors.
So this is somebody's fan thing that they did on Etsy, I'm assuming. This is not done by over $1 trillion company. I guess multiple $1 trillion company in the United States, right? Etsy.
Yeah, about that. So this is the Apple.com newsroom where they're introducing this. I don't know.
What in the world? Okay, this made my day. It's Apple. It's early for April Fool's jokes, but well done. You got us all. That's
innovation, great. Innovation, man. It's a very expensive. Guess how much it costs, Roy?
It's. I think I saw it. It was $200.
Yeah, it's $229 in the US. This purple sock thing. Yeah, what? Max 7 or gloves off. Meanwhile, Apple.
Okay, so no hate on anybody. Like if you buy this, if that's your style, that's cool. But I'm not an Apple guy. So those of you that have Apples, if you would buy this, just say that you'd buy it. I'm curious if somebody would buy it, and there's no shade, but it sure looks like they want men to wear some sort of like combination crochet scarf and purse.
If you say you would buy this, I am banned. Mods have free reign to ban you from this chat because you have too much money that you would buy this like weird. It's not even stylish, man. I don't understand. And there's maybe
but Paul's comments at 6:03. I don't know if you want to highlight that or not, but
I already did, man. I already did. Yeah, JVM says I'd wear that, dude.
Oh man. Okay, so welcome guys to Bootleg Weekly, and that's what a way to start it off. Especially fun at earnings season. Always a fun time to be here. We have some set topics that we'll discuss tonight. Questions related to the topics are welcome. Now, if you have topics on other, oh man, I'm gonna have to not read the comments tonight. You guys are gonna be too funny. But if you have questions on other topics and what we're going over towards the end, we have a Q&A period, and so we try to do those rapid fire. Some more rapid fire than others. Tevis, where do you want to start?
I think I already started, man. I threw down the gauntlet with Apple's tube sock product.
I mean, like that is truly impressive that Apple has come out with such an innovative product, which will actually change the world, change the planet. Did the stock probably didn't do anything based on that, right?
Bro, I hope the stock didn't do anything. Please, let me see.
Oh man,
up 2%. It's up 2%, Roy.
What are we doing, guys?
Yeah, what is the world that we live in, man?
What are we doing?
Hey, what is 2% of it's 4 trillion market cap? So they added 80 billion on the back of this. 80 billion for socks.
80 billion for phone scarf.
A $200.
What was the name of it again?
It's called the iPhone Pocket. iPhone Pocket. Yeah.
Oh man, they're even messed up doing names. Like,
so it came out today, guys. iPhone Pocket just launched, highly anticipated tube sock that's purple, and it added Apple $80 billion in market cap.
Okay. Well done, Apple.
Congrats.
You didn't need AI. You needed a whatever that iPhone Pocket thing is. I don't want to know how much they spent in R&D on that, but it was probably an egregious amount, Tevis. You know, people are talking about in earnings calls, and we'll get to Nebius, by the way, today. They had earnings. Their spend on CapEx stuff and just to get where they need to be as far as AI. We'll also talk about NVIDIA today, too. And then there's Apple out there.
It's Apple. There's innovation, and then there's innovation, you know?
It feels like that meme of the three-headed dragon where you have like two that are really fierce, one that's a dragon head. Yeah. But there needs to be like six others and then Apple. Oh man. All right. Well, the second problem, you are a shareholder of Nebius, right, Tevis?
It's my second biggest position. I bought like 300 shares more today.
All right. So I took a look at the earnings. I didn't go like super deep into it. I had not even pulled up the slide deck. I looked at some headline numbers. I looked at some quick like highlights that stood out. And I'm familiar with the company. I swung traded in the past. Looks pretty good to me. There's maybe like there's maybe two reasons in there why it fell 7%. But What are you thinking? What stood out to you as far as highlights? And are you adding?
Well, I did add like 300 shares today. So I bought a nice, however much that is, like 30 grand more of Nebius today. And it's looking good. I mean, I've also been in meetings all day long, but maybe I can share with you some stuff. So this is their earnings presentation here, or I mean, their earnings like highlights. 7 to 9 billion in annualized run rate revenue at the end of 2026. This is up from like 5 billion. So they basically are increasing their numbers by a big amount. They signed a $3 billion deal with Meta over 5 years. This comes off the back of their Microsoft deal, which they announced like a month ago. And yeah, they're basically fully booked for more than half of 2026. They missed revenue because they literally didn't have the capacity, essentially, to be able to to fill the demand. And they also mentioned that the $3 billion deal with Meta was as a result, like it would have been higher, except they just didn't have the capacity, right? So I also saw this. They're going to be diluting essentially by 10%, and this is partially why the stock fell, because people don't like dilution, but the company is still growing over 300%, right? So I'm just looking at some posts that I liked throughout the day around Nebius. Yeah, 800 megawatts to 1 gigawatt connected power, completely sold out. And the idea is that once they expand their capabilities more, that deal with Meta is going to get bigger once they have that relationship already built out. They got price upgrades, $150 price target from Davidson. So the dilution, I think, was one of the negative pieces. I think everybody saw through the fact that they missed revenue. Like it's not like if they are literally sold out of all capacity and they missed revenue as a result of it, then that tells a very different story than they missed revenue because they're not growing fast enough. And speaking of that, the Rule of 40 score is 719 for Nebius. That's literally the highest one that I've ever seen, ever. So this is an insanely fast-growing company. Guided 8 billion ARR. Current market cap is 27 billion. If you subtract the $10 billion of subsidiary value, you realize that Nebius is currently trading at 2.2 times guided 2026 ARR. Like, there's nobody who can tell me that they're expensive considering their growth rate and what they're doing. Yeah, there's. I also have some things. Yeah, so this is the quote. Our agreement with Meta is valued at $3 billion with a 5-year term. The size of the contract was limited to the amount of capacity we had available. So like these guys are supply constrained to the max. If they had more supply, the deal would have been bigger. And there was also a quote here from, I think, the chief revenue officer that that they are basically sold out for the first half of 2026. Yeah, we secure as much capacity as we can, build as much as capital allows, and only fill GPUs when the demand is visible. So, anyways, this is the long story short with regards to Nebius. Securing of land and power is about 1% of capex. Yeah, so here it is. Manuel posted it, saying that more than half of the 7 to 9 billion ARR target by the end of 2026 is already booked. More than half of their target. So if it's 9 billion, he's saying like 5 billion is already booked. Well, 5 billion was their original guidance. And so it's like, well, they basically doubled that to 9 billion. And now they're saying, hey, half of it is already booked for 2026. And the fact that they're trading so cheaply, like, I don't really look at the dilution and point it as something that will dissuade me from investing, because I can see this popped up. I can see all of the other things that that they're doing, right? So anyways, that's a high level overview that's not very well structured of Nebius earnings. What did you think, Roy?
Yeah, this is a company where I mean, it's extremely impressive. It's a little bit skewed right now just because it's, very minimal comps, and it was a very different business a year ago. But that doesn't understate the fact that they are growing incredibly rapidly. Demand is through the roof. I heard one of those highlights that stood out was it sounded like that Nebius is going to be a little bit more selective with what they offer next time as far as to clients, that they may have sold out a little bit too fast. It's kind of like the thing if you're, a street vendor or something like that and you sell out all your food, you probably need to raise the price a little bit, or, be more selective on who you sell to. So was that an accurate assessment of the remarks? Okay.
And it's interesting that you say that, because in my mind, as you were saying it drew parallels to NVIDIA back when maybe last year, when everybody was just begging to buy their products, and like Tesla was trying to elbow their way to say, hey, sell your limited supply to us. And Meta was like, no, sell it to us. And Microsoft was like, no, sell it to us. And like, it's only a finite supply. And what happens when the demand far outstrips the supply? Well, price has to go up to meet that equilibrium, right? And so I think the same thing is happening with so many of these companies from an AI perspective, because the demand is so vast out there. And these companies are going to benefit. And the fact that Nebius was down 8% today, when it jumped like 20% off the back of that Microsoft news, and now they announced Meta news, and they're like, hey, like, dude, if more than half of the year 2026 is already booked, that gives you a certain level of confidence that they're going to meet this new guidance. And if they're doing 8 billion of revenue next year, but they have a 27 billion market cap, and that's only if they meet, I think this is like pretty cheap, all things considered, right? In the grand scheme of things, of course, because when you consider the growth rate and when you consider the subject matter of like the area where they play and the demand that's out there from a macro perspective that we're seeing, people talk about from the NVIDIA perspective. And I want to talk about Burry short, because that's an interesting segue too.
Yeah.
But, I think they have a really good shot of overshooting this guidance that they provided and signing deals with other hyperscalers as well. So for me, like the writing was on the wall, and I just ended up buying more shares and averaging up on my shares and doing that quite shamelessly.
Yeah. So, but yeah, overall, it's interesting to me, and I'm gonna have to put it, back on the closely watched, closely monitored list in case cheap gets cheaper. And I don't think it's expensive here. It's one of those that's harder to value. Just because they are pre-revenue, and the revenue is growing at an insane amount, but it's also fueled by debt. And then you have the sum of parts type of business as well. So, but I don't think it's expensive here, especially given the revenue growth. They also missed on EPS, but you didn't bring it up, and you're right to actually not bring it up, because they're not profitable yet. They will be in the future, but also like right now they need to be ramping their revenue, not focusing on EPS optimization. That's like way later. So this is the exact right approach when you have demonstrated, and I think that they've effectively done so, that their product is very good and that there is insane demand, that they're saying, okay, we have an opportunity to actually accelerate even faster, but we need to take out some debt to do so. In this case, equity raise makes sense to me. If I was a shareholder, I would be excited, not unhappy. I'm not a shareholder, and so I'm interested. But yeah, I think that it's very compelling. Now, the other reason why I think maybe it fell too, beyond it, it rose immensely, and sometimes like even when you have an impeccable earnings, you need to give back a little bit of those gains when it goes up too much, too fast. But I also think that it might have been that some people were in this just for chasing a green candle. There was a lot of traders in this, just riding that momentum train. And of course, talking about an equity raise, which they did, that doesn't get people excited, and so they bail. And so usually that's a short-term hangover of the stock. I don't think it's a long-term one, but I'll be watching. And like if I miss it, if it goes down to some even more stupid price, like $75 a share, let me know. Tag me.
Yeah, it's going to be very interesting to see where they go, man. And I think like okay, whatever, we had this like little flush out, and quite frankly it's very volatile because in pre-market this was down, right? And it opened up and it just shot up like 5%. Like in pre-market it fell as far down as $99, and then it went up still in pre-market to $118, like a 20% swing. And then it opened at 114 and it fell to 102, and then it went back up to 115, and then it fell to 99, and now it's at 102 again. And it's like it's swinging like 15% up or down intraday multiple times a day. So I think a lot of the market right now, like there's people who bought at $20 and $30 that some of them might have treated it as a trade, chasing a green candle, as you say, and flipped it, and that's fine. There's also people who are now buying for the first time. I saw one of the Hims guys, Nighthawk, just bought it for the first time. I think Amit also bought it for the first time, like today. Yeah. So people are buying it for the first time in the $100 range. I mean, I bought it at $50. I bought it again at 75. I bought it again at 90. I bought a whole ton at 110. I think my cost basis is like 80 something, like 84, 85 right now.
Did you not buy it in the 20s with me too for a swing?
Or... No, I bought it after. I bought my first buy, I think, was like $45, $46. And then I bought more at 50, but like nothing like the size that I have right now. It's my second largest position when you don't account for cash. And I think a big reason for that is because I'm seeing the forest for the trees. I'm seeing the continued execution. I see what is like in front of your eyes. And I remember when I think Manuel was on the stock tank. I think it was Manuel. And basically we had a stock tank around Nebius, and they were saying like, look guys, like this is growing like 600%. And yes, it's super expensive right now, but it's going to grow into that valuation in like 2 quarters. And I think I was the one that called bullshit to say like, yeah, like 600% is cool, but I don't think that's going to last. Well, it's actually like we're seeing that it's growing into that valuation. I'm not saying that 600% is sustainable by any stretch of the imagination, but I'm saying that every single quarter, when they execute and they sign these deals with hyperscalers, it becomes more reasonable of a valuation because they're growing faster than their valuation is growing, if that makes sense. Yeah. So
yeah, and I was there during that stock tank episode. I was as a shareholder too. So it's funny that I got out and now you're in, but that sometimes happens. Yeah, and the only reason why I got out, I looked at Nebius, I'm like, likewise, I'm like, okay, I think that they'll do very, very well, and they will outperform NVIDIA, but NVIDIA is more stable. I'm just going to put more money there. And I figured it might outperform, and it probably would outperform, but I have a lot of beta in my portfolio. So, but I also didn't think Nebius would go this high this fast. And that's like even at $100. I sold out at 45. So it was like almost a double for me.
The other thing to consider, Roy, is that this has very little institutional ownership relative to other names. And the institutional ownership, I think, is going to be a big opportunity because you're seeing these big raises from analysts. I mean, the Davidson raised like 150. I saw other analysts coming out with 180 as the price. And then like, dude, these are price targets that are like 50 to 80% of where we're trading right now. Analysts don't do that normally. They don't go out on a limb to like stick their neck out and put a price target that's like double where we're trading. And so I think that analysts and also institutions are going to start to take notice to a lot of these companies, in CoreWeave, Nebius, and others. And there's going to be a base essentially of the people who bought and sold to flip from 25 to 100. Maybe it's an institution that's buying those shares at 100. And I think it's going to go higher than 100. Of course, I wouldn't be buying it today if I didn't think that were to be the case. But I just think that there's a lot to like.
So it's your second largest position. Have you? I know you have some cash, but did you trim out any other positions to add to this, or?
Yeah, I did. I trimmed a little bit of HIMS.
I was going to ask.
Yeah,
I was thinking it was HIMS. Like it's really funny. Like, real quick, Nighthawk, a big HIMS guy, into Nebius as well. Manuel, originally HIMS, now into Nebius. There's that connection between the two communities. So I'm wondering if, and there's several other guys too that are probably you'll tune in here tonight that are HIMS guys that hopped into Nebius as well.
Yeah, and I mean, I think that it sort of makes sense. Like HIMS was this company that was growing insanely high. It was like 70%, 80% growth. And now it's like, well, they're out here, missing earnings. And, so like, I get it. But I also think that HIMS sentiment is in the gutter. A lot of that is well-deserved. I think maybe it's also undervalued depending on how if you think management can see themselves through the storm. For me, like I still have my HIMS position. Don't get me wrong. Let me just check my portfolio. I trimmed it down to about 4%, and it was initially like 7 or 8. And I also sold my my SoFi January 2026 leaps. Like, dude, those are $10 leaps, and I was up 10x on them. I wanted to post about it, but I knew people online would flame me about like, oh, why'd you sell them? You're only up 10x. And so I just didn't post about it. So I just sold those, bought a bunch more Nebius. I bought more BMNR as well. That's now my third largest position. But that's a trade, like more of a trade than a long-term hold.
Yeah. I was genuinely curious because normally when you do something that sizable, there's some trims too. So, it makes sense to me. I mean, Nebius, it seems like the short-term and long-term, there's a good opportunity here. Even though I've sold out of it, and I could, like, one of those things you have to do as an investor is when you're wrong, like you have to admit when you're wrong. That way you're not going to miss it. Like if the market gives you another opportunity. So maybe that's what's happening here with Nebius.
Yeah, SoFi is still my number one Willy Wonka. It sits at 24.7% of the portfolio as of this recording. So it's about a quarter of my portfolio.
Well, maybe so. Your choice, dealer choice. SoFi crypto next, or the NVIDIA Michael Burry stuff.
I think let's go into the Michael Burry stuff, and then we can save the SoFi stuff for more people to join in, and as well they can just wait for the SoFi stuff. 1 trillion. Josh, I got to make a video on that at some point or another. Nebius, just to answer this question, it's my second largest position. So actually, technically, cash is my second largest position because I'm using it for cash secured puts. But if we exclude cash, then Nebius is my number 2. Okay, get this. SoFi is 25% of my portfolio. What percentage do you think Nebius is, which is my number 2? 8%. So I still own like almost triple the amount of SoFi than I do Nebius. So
by the way, I put out a price target for the end of 2026 on SoFi, assuming bull macro is still well intact. Do you any guesses?
No.
65.
For which year?
End of 2026.
What? That's dude, I hope you're right. Because I will be a very happy shareholder. Josh will be a very happy shareholder. How'd you get to 65? Let's talk about that first and foremost.
Well, so it's napkin math. I mean, that's what price targets honestly should be. I think some people do DCFs and go through it. And I thought about it briefly. I've done DCFs before as well. And I'm like, I mean, honestly, it's just a guess. But it's a guess based on several things. And so I had 6 different, plus some bonus catalysts that were happening for SoFi in 2026. And so I probably won't remember all of them. I've got them there. And if I miss one, whatever. But we have more rate cuts. So rate cuts in the macro ends up, of course, fueling SoFi in the lending platform. We've already seen it at work It looks like that's going to continue through next year. We have probably the consensus is 3 rate cuts between now and the end of next year. Of course, things can change in a hurry, but I mean, that's just good across the board. Second is student loans. Student loans and student lending, there have been issues as far as at the master's and post-grad level where they have limited the amount that people can actually borrow. And so they have to do private student loans. Plus, we've had elevated rates on student loans for a while now. And some of those students are beginning to graduate. So they would look at those rates that they're paying now and see an opportunity to refinance, especially as rates decrease. SoFi owns the majority of private student loan market. It's likely that not only does this benefit for catalyst number 2, student loans, but also that they launch that on their loan platform business, or possibly some other iterations as well. So that's 3 factors right there. Crypto platform is another one where, I mean, you can see the ambitions of Anthony Noto. He had the fireside chat today with KBW, I believe, and it's not just hey, you can buy crypto on here and hold it. No, we'll talk about that more on FinTech Friday, but it's ambitious and the market is forward looking. So I think 2026, I knew it was going to launch, sometime soon. We all did, but I think the market will begin to get from that it's more than just a bank. Obviously it does to a certain extent. Tech platform acceleration we see today. T-Mobile is one of those. That's a new client for the debit cards. All the debit card stuff line up very well with Generation Z, who is very credit adverse. So smart launches there. Tech platform will grow. Of course, Q4, they get 30-something million from Chime. So it'll look like it grows, but real organic growth you'll actually see ramping through the year. So we were not going to see, I think, 10% growth, but like 20, 25% growth, maybe even higher for the tech platform business. Ooh, and there's one that I'm forgetting. Plus a whole bunch of other stuff like SoFi Pay that I think are just possibilities of being S&P 500 inclusion. That's probably going to add about 10% to the stock based on, again, it's napkin math, but based on like peers that have entered, that have gone through all the other smaller indices and have about the same amount of retail participation versus institutions. It'll probably pop up initially more than that and then fade back over the month. But yeah. So it's a combination factor, but we need macro to be intact. If we go into a crypto winter or bear market, yeah.
I don't want to fight you on any of those points. I think all of them are valid, and we'll see where it closes, right? I think where SoFi closes is like the year 2025 is going to be indicative. I think if management gets their tranche, that would be really interesting to see what's next for them from a motivation perspective. And yeah, I could see it, man. Like I saw so many posts, and I guess we're talking about SoFi now, so we'll talk about it. I saw so many posts today on the crypto news that highlighted that this was like the first nationally, chartered bank that was essentially allowing the buying and selling of cryptocurrencies. And I saw Solana post about it. Like,
it's a big deal.
A whole bunch of like crypto people, right? Like it was weird, Roy, because so normally I do my BMNR weekly recaps and I like certain tweets from certain people, like crypto news people. And those same crypto news people were posting about SoFi, and it was like my worlds were colliding. It was very weird. But the fact of the matter is that, hey, look, like SoFi is going to get some some recognition as a result of that, right? So, it is a big deal. I don't think we should discount it. And I think they're going to expand on it even further. And I would see them being the first in many aspects with regards to like crypto-backed loans and all this other stuff as a nationally chartered bank.
Yeah. And he mentioned also, going to other banks as well and saying, hey, we got our stable coin here. We got our other assets here as well. So that'll take a while. And I think a lot of banks will want to try it themselves. The big ones will succeed. Smaller ones will probably not without partnering with somebody. But first mover advantage is a big thing. And they're not the first in crypto. They're not going to be the most savvy with crypto, but they might be among the banks. And that is a big deal.
Oh, no. I think we said crypto and we got the bots. So
Oh man,
Lurker is going to have to do his job, I think, starting soon.
the battle is on.
Yeah, people are like, buy our token. Yeah, so I think SoFi 65 in 2026. I like it. I like it a lot. I'm here for it.
It's better than 11.
It is better than 11. Yes, it is.
Also, with that, I think that a lot of that will come in the middle to late part of the year. That's a complete guess, but I don't think that Noto and his team get the 45s. But I think it's probably actually comes closer than I was thinking initially.
Well, I don't know, man, because like the later part of 2027 is when I would imagine that the economy catches up to the stock market in terms of like the jobless numbers and the actual layoffs that we're seeing, and all of this other stuff. Like, you have a period of time where people are burning through their savings, they have severance, they have a package, let's say, as these companies restructure. And then you have another period of time where all of these people are burning through their credit cards, whatnot, and then it comes to a boiling point. And we know that Fed decisions today really affect the economy, like 12 months from now. So I think that it's going to be really interesting to see where we are at this time next year, because we could be in a bad underlying macro environment. But the stock market has been in a K-shaped recovery for quite a while now, and it continues to be.
Yeah, I mean, that could happen. It could even happen next year. Won't happen probably until the end of the year, just because the tax refund stuff happening in the early part of the year. Where I don't know if I mentioned this to you guys. With you, I mentioned it with Amit and Tanner the other night. There were some adjustments to the tax code which benefited taxpayers, and the IRS did not choose to change withholding, which means a lot of people overpaid. And I think the refund was something like $300 something per person on average that was going to come beyond what the normal refunds would be. So that'll help consumers. And I hope the stimulus check stuff doesn't happen, but I kind of have a feeling that some form of it will. And that'll be really good for like low-end consumers for a little while, but I'm afraid it's going to reignite inflation. Plus, we actually need to get serious about not having such a deficit. But nevertheless, I think that, yeah, towards the end of next year, we could see a lot more pain. A lot of the like Kava, Chipotle, I don't think Starbucks. There were several others as well that mentioned that there was some slowdown on their target demographic. And I don't know if that's a case of just a weaker company. Maybe Chipotle is, but Kava, I wouldn't have thought so. So,
yeah, I have no idea from that perspective. I mean, if you're somebody like SoFi, you're going to keep innovating regardless, and you're rolling out new products regardless. And we've seen SoFi in a poor macro environment and how they execute. They've been proven to execute well. So I'm not worried from that perspective. But if you do have a weaker macro, then generally speaking, earnings are not going to be as strong. Companies are forward looking, and so they're not going to be providing as good guidance, and you could have a turnaround, right? I think right now, it's too early to tell, but I think by the end of next year, we will definitely know with certainty. As a result of a lot of these layoffs that we're having right now, as a result of the Fed's speed, let's say, with regards to them cutting rates, the deficit. We're going to hit what, 39 trillion, 38 trillion by like March or something. It's insane. We're adding like $1 trillion every 2 months, every 3 months. And it's not like that. It's a runaway train, bro. You're not going to catch that thing. And so I don't know what's going to happen. I don't know what's going to, and then like you have the wild card of having some more geopolitical conflict out there, like pins and needles everywhere. I don't know.
maybe we could do a reverse split on the debt. That might solve it.
Yeah, I mean, I don't know.
Maybe not.
It's like those TikToks are like 38 trillion in debt to who?
Yeah, it's. I mean, a lot of governments are, but yeah, it's not a great thing.
Well, one thing I will say is that aren't midterms coming up soon?
Yeah, next year.
Yeah, right. So that's going to be interesting, right? Like midterms, we have to prop up the economy to make it look good for midterms so we can get reelected. And then after that happens, then,
Yeah, that's why I'm actually thinking that some form of stimulus would probably come next year, is because midterms shouldn't be that way. That's the way it is, though. Or maybe shortly after midterms.
Midterms are usually what, October, November?
I believe November, but I might be mistaken. So
Yeah, I mean, I could see, you know, us having like some type of like I can see the administration doing everything they possibly can to prop up the markets until next November. I don't know if the macro's gonna, play ball, but TBD.
yeah,
Do you think we're having a Santa Claus rally this year?
I do. Yeah, for sure. There is some stress in the lower end consumer. I think the shutdown, at least being kicked over to the House, they're supposed to be voting relatively soon. I think that'll probably go through, and so that kicks it can down the road a little bit. That was really the only thing stopping it, but it usually happens, especially in a bull market. I'd be a little surprised if we don't see it. The other thing too with consumers is it's not ideal, and it's one of the reasons why I don't want to invest in somebody that does just buy now, pay later, like a Firm or Sezzle. But that's another credit box that is open and available on a very wide scale to people that haven't taken that yet. So I think that that'll be enough to keep the spending alive, at least for one more Christmas season. At least, things could work out better than I expect. But yeah, it'll be a Santa Claus rally.
You know who doesn't think we're going to have a Santa Claus rally?
Michael Burry.
Michael Burry, baby. Michael freaking Burry of The Big Short has another Big Short, which I will share in just a second when I can find the link. Yes, I made this post, and Michael Burry has 66% of his portfolio. 2/3 of his portfolio is short Palantir and short NVIDIA.
Yep.
Here's why. Okay. So Michael Burry says, understanding depreciation by extending the useful life of assets artificially boosts earnings, one of the more common frauds of the modern era. Massively ramping capital expenditure through the purchase of NVIDIA chips and servers on a 2 to 3 year product cycle should not result in the extension of useful lives of compute equipment. Yet this is exactly what all the hyperscalers have done. By my estimates, they will understate the depreciation by 176 billion in 2026 through 2028. By 2028, Oracle will overstate earnings by 27%, and Meta will overstate earnings by 20.8%. But it gets worse. More details coming November 25th. Stay tuned. And he shared this chart. And basically what this table is the depreciation useful life of network compute. And as you can see, back in 2020, these companies were baking in between 3 and 5 years of depreciation. So basically saying, if I buy a chip, it's going to have wear and tear, and it's going to be useless in 3 to 5 years, and I'm going to write that off on my expenses. Now, these companies are saying 5 to 6 years of depreciation. Now, if in fact that is 5 to 6 years, that's all well and good, because that expense is essentially split over those years. But if it is 3 years, let's say, and they'd say 6 years here, well, then that looks better on their balance sheet today. But if they do have to essentially buy new units in 3 years, that's going to look worse later on. So 2026 to 2028 is when Michael Burry, who's, by the way, 66% short on NVIDIA and Palantir, is saying that these hyperscalers are going to get rocked by expenses because they are making the numbers look better with stretching out their depreciation schedules. So they reduce near-term expenses and inflate current profits. But if, in fact, the chips and servers degrade faster than what they've modeled here, which is historically faster than they've had modeled in the past, that hits earnings all at once. Now, the other side I added here in my little note of the argument is that the chips could be getting better and having longer lifespans. I mean, NVIDIA talks about efficiency gains. Workloads still kind of suck on training and inference. It's a lot to process. But if, in fact, the chips are getting better, they don't have as much wear and tear, they can, in fact, withstand 5 and 6 years, then all is good, and Michael Burry doesn't have a bear case. I said here, if Burry is right, the downside is a cliff because there's so much price to perfection with regards to AI stocks. So that's essentially the argument that he has. Now he's going to say more coming on November 25th. I don't know what that is going to be. If he's going to drop a short report or something like that, it's something to mark in your calendars. I think NVIDIA also has earnings coming up, Roy, if I'm not mistaken.
Yeah,
So
yeah, they do.
that's going to be really interesting as well. Let's pause. What are your thoughts?
Yeah, so the November 25th thing is for sure some sort of short report that he'll do. It's probably going to be less than expected, and I don't think much is expected, but that's kind of the way that these things go. Very deliberate on the timing as well, so I'm kind of curious what else is around that time. It is shortly before Thanksgiving, so maybe it's to hit right then, have people digest the news, and then maybe it really tanks whatever he's targeting on Monday. Now it's of course I hold Palantir, I hold NVIDIA, so it's like come at me, bro, I guess. But the Palantir short, I think, is probably technically it's puts, but whatever. It's effectively a short. Are surprising, but I think it's just more of a valuation thing that he sees if things get pulled down in this, even though Palantir has nothing to do with CapEx spend and depreciation stuff like that. Doesn't impact them at all. It's not even tangential. But I think it's just for valuation, which I think is risky. I think it's dangerous, and you may lose some money, even though Palantir is ridiculously expensive. Like I'm not saying it's justified where it's at. The NVIDIA one is what shocks me even more because, okay, so he takes aim and he says Oracle, for instance, is not committing fraud, but kind of dancing along the line by changing the way they do depreciation. And they did recently. And they're overstating or really understating these losses. As a result, it's just not accurate. Then take aim at them, focus on Larry Ellison and Oracle. Jensen Huang and NVIDIA, like unless you are expecting an invasion by China to Taiwan, I would not short them. Like I think that's really foolish. Now, yeah, I just don't see his argument with NVIDIA. It makes no sense at all. Yes, it's the most expensive company in the world in terms of valuation of a market cap, but
yeah, so like that's what I don't understand. It's like, okay, let's say Michael Burry is proven right. Well, all the hyperscalers are screwed because they have to re-up their chip supply in 3 years instead of 5 years. Guess who wins? NVIDIA. Why the heck would you short NVIDIA? Like short Meta, short any of the hyperscalers that you think are inflating their numbers by doing this. If in fact your bull case is right, NVIDIA actually stands to benefit more than what's been priced into the market.
Right. Yeah. I mean, he could already be out too. Sometimes he gets into these and he leaves. But that 13F filing, did you know when he filed it, Tevis, or hear anything about the timing of that?
No, when did he file it? Was it Palantir earnings day?
Palantir earnings. He had filed on the same date
What a
for
guy.
years and years and years in a row, and then hit right then during earnings. So he could have gotten out possibly, while in that pullback. There was a pullback. Ridiculous earnings, but again, it's priced ridiculously. So, but yeah, that seemed intentional. Carp seemed to take exception to that, and then Burry took exception to Carp taking exception to that. So it's been a fun ride.
Yeah, and NVIDIA reports earnings on the 19th. I just checked. So we'll see what happens. I mean, this is coming out a week after NVIDIA reports earnings, or less than that. It's going to be really interesting.
Yeah, I don't know why the 24th, but yeah.
Sorry,
I think it's a bit like the Roaring Kitty when he had the much ado about whatever the most recent date was, and it was just a flop. It won't be to that extent just because this isn't really being built up, but I think it'll be a nothing burger. I've seen that so many times when it's like, stay tuned for the next part, which is even juicier, and it's dehydrated meat or something.
Yeah. It's well, here's a crazy thing, man. It's like these guys report once every quarter, and Burry goes in and out of positions. Like if you look at his reports, one quarter versus another, it doesn't even look like the same portfolio. Like he trades. And so this could have been something where I know people were like giving him a hard time on Twitter because we had one green day and Palantir was up and all of these NVIDIA was up. And they're like, oh, Burry is, losing it right now. But he can essentially be out of the short whenever. He can publish the short report, get out the next day. And we wouldn't know until the next quarter. So, TBD. Burry going to save my NVIDIA covered calls. Ooh, yes. AMD had some news today. I don't think either of us are very well informed on AMD news.
Definitely not, yeah.
I shared something with you, I think, in our chat. Brock says, what did I miss? My dog ran after a rabbit and now it's as dead as my money that I had invested in PayPal.
Now, I'll have you know, PayPal was one of those few names that was very, very green in the beginning of the day with no news. And the only reason why, Tevis, is because it forgot to participate in the rally yesterday for some reason. So it's like doing its own thing. I'm like, what are you doing?
I would call Burry B tier, so I don't care too much about tinfoil theories. Look, man, whatever you think of Burry or any of these guys, quite frankly, I think it's worth having a conversation on what is their case that they're presenting, especially in the few times when they do present the case. Usually it's like a snippet on some media interview and they just drop like 20 seconds and like you can't glean too much. But when they actually drop like if he does drop a short report on November 25th, I would want to read it simply for the fact that I want to understand a different perspective than my own in order to break that echo chamber that we have inherently by being like just blindly bullish. Like I bought a bunch of Nebius today. If somebody came out that said, hey, Nebius is going to go to zero and here's why, and it was like a smart bear case, I would read it. I wouldn't just ignore it because you're just being a prudent investor in that regard.
For sure.
What's next?
Did we have any other topics?
What happened this week?
Let's see. The SoftBank with NVIDIA. That was
yes.
So I think that's it.
SoftBank sold out of NVIDIA entirely. I think that news dropped today, Roy.
Yep.
And it was like what, $5.8 billion stake, something like this.
Yeah, it was decently sized, and like the thing is, they explained the whole time. They're like, it's not because we're bearish on NVIDIA or we don't like them or Jensen Huang wore the wrong color of jacket or something. It was just because they needed the money for other investments, and yeah, it's like, well, that happens.
What other investments do you think they need the money for that is better than NVIDIA?
I think they actually named one specifically.
PayPal?
It wasn't PayPal, no. No, that's not the type of business either that they look at doing. Let's see. Well, I'm not finding it, so.
If anybody knows in the chat, then just let us know what SoftBank is going to use that money for that they got out of NVIDIA.
Yeah, OpenAI might have been it. Osiris had said it. They sold T-Mobile as well.
Wow. That's interesting. I don't know. Selling NVIDIA to buy OpenAI.
Yeah, I wouldn't.
What was that news that I sent you with Anthropic with regards to OpenAI?
Yeah, Anthropic is going to hit their targets as far as their revenue. Let's see if we can pull that up.
Yeah, here, I got it.
Okay.
Anthropic projects it will break even in 2027 and reach around $70 billion in revenue and $17 billion in cash flow by 2028, with most growth coming from enterprise usage of Claude. That puts Anthropic on track to become profitable earlier than what OpenAI had projected, which is 2029 profitability. So right now we have Anthropic profitability 2 years before OpenAI profitability. on the
Yeah,
back.
it's this is one of those. Actually, I've said a number of times I wouldn't really be too excited to be investing in OpenAI. I think it'll be fine, but it is a commodity. Anthropic likewise has, but their commodity, Claude, and the way they specialized it is more of the enterprise and infrastructure type of LLM, and it's being used rampantly. People love it, and it's very good at what it does. So, yeah, they are a pretty impressive firm, and I don't feel like, at least all these CEOs are a little bit odd, but it I like it better than Altman. So
Yeah. This was the news around the AMD stuff. Lisa Su doubles the prior market size estimates for data centers to over $1 trillion by 2030, arguing over 40% CAGR between now and then. So basically saying the total addressable market is going to grow by quite a bit, in a very high clip. If you're growing 40% CAGR yearly, that's insane. It's
Yeah.
like it's a 5x in 5 years.
yeah, that's incredibly impressive.
Any thoughts there, Roy? Like, what if the market for data centers actually does 5x in 5 years? What does that mean for these companies? Who is the biggest winner off of that? Like AMD, NVIDIA? Or do you think it's companies like Iron and Nebius, CoreWeave? Or do you think it's the hyperscalers? Or do you think it's the software LLMs like OpenAI, Gemini, and Anthropic?
Yeah, probably not the latter bunch, but could be any of the others, and will be a combination of that. I would say maybe the CoreWeaves and Nebiuses in that scenario, but
Why?
yeah, multiple winners and all of them do well. I just think that there's more. So it's a supply demand type of thing, and I think that there, given what Nebius said and what CoreWeave says as well, that there is no more capacity at this time. And you can only ramp that up so fast. So I think that that's the biggest constraint. And because of that, since there's a lot more demand than supply, they can charge a bit of a premium. So I think they would benefit. Of course, the faster that ramps. Just surface thoughts, could be wrong. What do you think?
Well, it's interesting, right? Because like I want to say the Nebiuses and the CoreWeaves because they can essentially charge a premium. But I think like fundamentally from a supply perspective, all roads lead to the chip creators, right? Because like if like you could be successful or you could be unsuccessful at running a lemonade stand, but if you have no lemons, you're screwed. And so ultimately, if the world was just lemonade stands, the people making lemons are the ones that are guaranteed revenue. And there's plenty of lemonade stands in the world that's going to go bankrupt. And there's plenty of lemonade stands that are going to become like global franchises. But ultimately, the winners that are guaranteed winners are going to be the ones that are producing the lemons. That makes sense.
Kind of. Too many lemons in that story for me, but
yeah, it's yeah. You got it. Investing in lemonade.
There we go. Crack the code.
Where is my disclaimer? This is not financial advice. Like and subscribe below.
Full port lemonade.
Full port lemonade. Hey man, you know what, Roy? Remember a Christmas gift where I gave out lemonade?
I do. And I remember not getting it and getting a terrible company instead.
You remember not getting? Yeah. Well, lemonade is up 117% year to date.
It's pretty good.
Right? And you know what Hims is up? 57% year to date.
Yeah. And pretty not good. It's actually not bad at all, but yeah.
Yeah, exactly. So lemonade is quite doing well. What's Joby up? Let's check Joby, guys.
I haven't looked at it. I saw that we did have an eVTOL question.
Oh, Roy, what do you think Joby's up?
130%.
Close. 102% year to date for the good old Jobs.
All right.
Who else was in the thing?
Block XYZ. That's the one I received because Steve hates me.
So Stevie Boy is losing. Am I winning? Am I officially winning?
I think you might be. Oh, Transmedics,
Oh,
TMDX.
yeah. Hold on.
That was doing really well. I haven't looked recently.
TMDX, 83% year to date. Wow. We are great friends to have at Christmas, apparently, except for Steve.
Yeah. Yeah. Quit letting Steve give to me. Like, what did I do?
Yeah. Yeah. It sucks that I gave Tanner Unity last year and he hated it. But then I gave Tanner was like, the first thing he said that came out of his mouth, he's like, I don't want to have this gifting for me. And then guess what? Chris got 118% grower.
That's right. Yeah.
So, okay. What, can we talk about this? I know this is a question,
Yeah.
but I want to talk about Meta because I made a members only video 2 days ago when I shared my portfolio and I also shared, my trades for the month and what I wanted to do. And among the ideas that I had was like, hey, I want to start a position in Meta possibly, and I'm not sure if I want to have Meta or Amazon as like my sitting in the big cap seat of my portfolio, right? Like who's representing the hyperscalers in Tev's portfolio? Is it going to be Amazon or is it going to be Meta? Currently, it's Amazon. Amazon's like 2.5% of my portfolio. Meta could be a good replacement or not. I don't know.
Yeah. Meta is, I still feel the same way as far as ethically with the company and the CEO. So I wouldn't invest, although there is a price where I would just mercenary it and buy some calls. And the price, I didn't look at it today. Didn't have time to watch the market much as far as the moves on the stock that I don't own, but it's very cheap right now. Algorithms sold it off. You're trading. It's growing rapidly. The biggest issue is CapEx spend, which they can reduce if they want to, but I think they're doing the right thing here. And highly profitable. They're monetizing WhatsApp. Like a lot of things are going well. Ads line up exactly where they need to be. Big partnership that they announced as well with, who was it? Wasn't Nebius. Yeah, Nebius. Yeah, I was like, it was Nebius. So, which should help scale them. And so, yeah, they're positioned really well. It's attractive here. It's not attractive enough for me to like kind of betray myself and be like, all right, I'll swing some calls. But
well, let me ask you this, Roy, and you let me know if this changes your opinion or not. So we had the Nebius news come out this morning. There was also some other Meta news that came out this morning. I don't know if you saw it or not, but Meta's chief AI scientist is leaving the company to build his own startup. So Meta is going to lose one of their biggest AI resources. Chief AI scientist at the company planning to leave to start his own startup. NYU professor, senior researcher at Meta, winner of this Turing Award, plans to leave to raise capital for a startup that was focused on continuing his work on world models. So, Meta has changed how it approaches AI development in response to concerns that it's being outpaced by rivals. The company has started revamping its AI organization, hiring over 50 engineers and researchers from competitors to build out its new Meta Superintelligence Labs, invested $14.3 billion in June for a data labeling vendor, Scale AI, and brought its CEO, Alexander Wang, to run its new division. I think this guy is replacing Yan, essentially. I don't know enough about this guy, so I'm sorry if I'm butchering it. But what do you make of this, if anything at all, that Meta is now losing a big resource that they had in AI?
Yeah, I mean, maybe this is what they knew that this was going to happen, and that's why they bought a lot of talent and to help with that transition. If not, it was probably fortuitous that they did it at that time. But this will happen, and they have a lot of money. I'm sure that they offered a lot of money to this guy to keep him. But ultimately, sometimes you get to a certain level of income and you're no longer motivated by money, and that may be the case. So, I think Meta will be okay though. This isn't a winner take all type of situation, I think.
Well, what I find interesting about this story is like, okay, this guy's going to build his own startup, let's say. Why is Meta not funding that startup, letting him spin out and, giving him all the resources and essentially partnering with him on that startup, like doing like an incubator type of thing? as opposed to just letting him go. Because, you know, one of the things that I was really bullish on with regards to Meta, which we talked about on this podcast before, was that everybody that Meta takes and pays hundreds of millions of dollars is somebody that the competitors cannot have. And by letting this guy leave, they created a competitor for themselves 3 years, 5 years, hell, at this point, like 1 year down the road. So why wouldn't they just keep him in the, you know, umbrella and just say, hey, you can start your own startup. We'll give you the funding. We'll give you the resources. We'll give you everything you need. What do you think?
Yeah, I don't know. They might have known that, like, no, this guy's intent on doing his own thing, and he doesn't want to sell any stake or equity right now. Could have been bad blood. Like, who knows?
Yeah, I can't wait for the Netflix special to come out for all this stuff that happens behind the scenes with AI, man. And it's like probably some drama. Okay. What do we want to talk about Duolingo? Did the earnings come out since our last bootleg? Did we talk about it?
We didn't talk about it, no. But yeah, we could talk about that.
Yeah. So Duolingo, I made a video on this, which completely tanked. And we can talk about BMNR too, guys, because I see some of you asking about it. Duolingo, what do you know about their earnings, first of all, Roy? Anything?
Duolingo looks good as far as headline numbers. You know, they're not optimized for EPS, but they're doing well there. But they grew still 40-something% year over year, which is impressive. The only thing that was not as good was their implied guidance. Mostly their forward bookings were reduced. And I made a video that also did poorly. So high five. Yeah, there we go.
Duolingo videos.
But yeah, that's right. But you know, honestly, like, you and I do this because we want to, and so we'll do it on topics whether they get views or not. Usually, just because we want to do it. But my thesis was that the reason why it tanked so hard on earnings, despite really good top line numbers, probably stop losses and all that too, is largely because this might confirm the thesis that all these other AI products are out there and they'll eat into the TAM, but they'll also eat into the revenue growth. So I don't think that's actually the case. I think it's probably a combination of 3 other factors, which I put in that video. But we don't know. We don't know for sure. And because of that, there's a cloud that hangs over Duolingo right now, and really good earnings. But if the market is convinced, which I think it mostly believes right now, that AI will strangle Duolingo, then it's actually not cheap, even though it looks pretty attractive right now.
I just am giving out some memberships to people. So you guys can go check out some of our after hours videos and also members only videos. With regards to Duolingo, look, what I will say is I think it's misunderstood. Can I play a clip from CNBC, or do you think that's going to not
go
be
ahead?
Good? Okay. So this is a clip. The CEO of Duolingo, this is on CNBC. He's talking about them focusing more on the long term. And thank you, Willy Wonka. And how they're doing that, he goes into tactics around the specific methodologies that they're focusing on the long term. And this is fundamentally the reason why the guidance is not as strong for next quarter, because they're not focusing so hard on monetization. They're focusing more on member growth. But just listen to this and try to understand what the actual changes the company is making.
We've realized that we're in a unique opportunity. Over the next few years, education, or the way people learn, is going to completely change. And that's because of AI. We now have line of sight to be able to teach people in a manner that is way better than anything we've seen before with an app. We have line of sight to be able to teach people in a way that is as good as a one-on-one tutor, and probably also more engaging than a one-on-one tutor. And if we're able to do that, this business is, right now we have hundreds of millions of active users. This business would be a billions of active users type business. I mean, it's just much larger, and that's what we're shooting for. So this is the main thing that I want investors to know, is that we are we have made a slight shift over the last quarter and in how we invest, and we're investing a lot more in long-term things because we see that as such a big opportunity ahead of us.
And so what's the preparation and adjustment that investors should make and expectations along those lines? Does that have to do with the AI costs that you alluded to before?
It's not so much the AI cost. I'll tell you what it is. The way we work at Duolingo is we're improving the app all the time. The app is getting better and better every day. And the way we improve it is we run hundreds of A/B tests every quarter. Now, these A/B tests fall into three big buckets. One bucket is monetization. That's basically getting more users to subscribe. Another bucket is increasing user growth, so kind of gamifying the app so that people recommend it more to their friends or stay longer. And then the other bucket is teaching better across all our subjects. Each one of these buckets has a timeline in how fast they can affect financial metrics. So, for example, changes in monetization affect financial metrics immediately, because if you just get more people to subscribe, they just pay more money immediately, and that's what happens. Changes in user growth, if we're able to get more users, that takes a little longer because first, you grow your users, and then they take a little while to subscribe. And then you can see that change in the financial metrics. Changes in how well we teach take the longest, because what happens is that you improve how well you teach. That over time has an impact of increasing user growth, and that over time has an impact of increasing monetization. So, kind of each one of these buckets is more longer term. What we have decided to do starting in, a few weeks ago, or maybe a couple of months ago, is that we have decided to start moving more of our resources relative to the longer term buckets. That means we are putting more resources on teaching better, that is employee count, for example. And the other thing that we decided to do is sometimes we run experiments where some of these things are at odds. So let me explain. For example, we may run an experiment in which we allow free users to do a little less every day. What that usually does is, if it gets more people to pay to have kind of unlimited access, that is what happens. So that increases our monetization, but it usually has a negative impact on daily active users if we do that, because people get frustrated. They're like, well, I didn't want to do that, so you just go away. So there are experiments that put monetization and user growth at odds. And part of my job has been always arbitrating between these two. If there's a trade-off to be made, kind of how do we make that trade-off? What we've been doing over the last couple of months is we are really shifting that trade-off to be much more towards user growth. Again, because what we want to do is we want to grow rapidly. I mean, we're growing daily active users at 36% year over year in this quarter. We want to continue growing rapidly for a long period of time. And we think that will allow us to, just reach the full impact of this business, which is much larger than anything that we have right now. So you basically, what you're seeing is a much more longer term view from us than in the past.
Okay. I think that was a great clip. And I think the reason why I like this clip is because a couple of things. Number one is he dropped a nugget there. I don't know if some of you guys noticed, but he said we're aiming for billions of users. In other words, you can't get to billions of users with just languages. You can't get there with how they're going right now. You need to stop, reassess, and he's thinking about the long term. So that's number one. Number two is it's small changes. They're putting relatively more resources on longer term tests. It's going to take longer for those tests to pay off, and fewer resources on the short term tests. Number two. Number three, he is prioritizing tests that focus on retention and lifetime value, and less so on, monetization in the short term. And so those are the three nuggets that you have to understand. The stock fell 30% on the back of earnings. The stock is down 40% over the last week. This is not a change that's like 40% of the company is, should be impacted. It's like, hey, they're changing how they do A/B tests. And what you can expect is you can expect slightly lower monetization next quarter or next couple of quarters, and you can expect slightly higher subscriber growth or daily active user counts. So I think that's a really important nugget. We're talking about Duolingo, ticker symbol DUOL. It's a really important nugget there, Roy, because he is saying, hey, look, here's where I want to get. It's years out into the future, and we have to make decisions right now that delay gratification in the next couple of quarters so that we can get even more in the next couple of years. And the market just didn't like that.
Yeah. And that's the right approach, for long-term investors. But I'm sure there's some, again, chasing a rebound that didn't happen. Maybe that was the reason for the sell-off. But I think that, the big part of it is those that were already listening to the bears a little bit, that they saw the bearish thesis confirmed because of the contraction in bookings. But I don't know that that'll continue or not, or if that's a short-term thing. But they have some work to do still to convince the market that they're more than just a language platform, that they're a learning platform. But if they do, and if they become that, this is in its infancy compared to where it will be in the future. So,
yeah. So are you a buyer?
No.
Why not?
Limited funds. So just everything that I hold is, I think, a stronger conviction for me. So, yeah.
Yeah. Yeah, it's DUOL. It's the ticker symbol. All right. What shall we talk about BMNR? Shall we give them what they want, Roy?
I suppose.
All right, BMNR. What is there to talk about with regards to BMNR?
I mean, not too much. They continue to buy and hold Ethereum. The one thing that even more important than I think their release that happens on Monday is this right here. And this is the one thing that I don't like to see, but we have seen it before. This tracks the Ethereum treasury company's trading volume. This big, beautiful blue or purple here is BMNR. And you can see that the volume dwarfs its competition, and it's continued to do so. But that volume is going down over time. That is actually not a great thing for BMNR specifically, just because they do benefit from that liquidity. It's one of the reasons why they mention how liquid they are as a stock as well. Now, the good thing is competition is still relatively low there, but yeah, that's something to keep an eye on. But yeah, we're waiting on Ethereum to actually appreciate in price instead of whatever it's doing right now.
Yeah, I mean, look, BMNR is has been disappointing. It's now under $40 a share, and I think Tom Lee remains as bullish as he has been in the past around his Ethereum price target through the end of the year. He just recently did an interview with Tom Nash, actually, and reiterating, his price targets. I think the technical pattern still remains intact for Ethereum and for BMNR, very strong. Ethereum also has an upgrade coming in December, which should help the ecosystem as a whole from a transactions perspective. And we see institutions that are accumulating BMNR left and right. I mean, we saw JP Morgan and Vanguard last week. I think I also saw, yeah, exactly. I think I also saw Goldman as well. Kathy Wood's been buying it hand over fist. I mean, she's been quite vocal about why she thinks BMNR could succeed. And the entire thesis there is, as a payments processor on blockchain, essentially, Ethereum is going to succeed to be the blockchain of choice for Wall Street, and BMNR, as the biggest digital asset treasury company, is going to benefit as well. All of these things are still intact. All of the, checkpoints along the road are still intact. It's just, a matter of playing out that story, and it's going to take some time. And I think that for a lot of people, they're impatient and they don't want to wait. They want gains now. But, a month, a quarter in the grand scheme of things is not that long of a request to wait. Yes, I agree with this comment. We do need staking. We do need outstanding share count. We need these things. But ultimately, I think they're going to be short bursts. If we get staking, BMNR is going to pump for one day. Maybe it's going to pump for 2 days. We need Ethereum to go up, and we need Ethereum adoption to go up in order for Ethereum price to go up. So I think really BMNR is a story that is going to take a little bit of time. I still think by calendar year, we're going to be materially higher than we are right now, but it's going to take a little bit of time. Yeah.
No, and that's why when I went into this, it's a swing position for me. That's 2 years. That's why I gave myself 2 years. I don't think it's an instant, like I would have been fine if it instantly went to well above and beyond my price targets. Yep. But I expected it would be more of a building up to that 5%. And then after that, we see a lot of momentum.
Yeah. Roy been waiting for payoff for 3 years. The man is seasoned in this game. He is not.
I can wait.
He is a patient man. So that's the TLDR on BMNR. If you guys want to see more, I mean, I do weekly recaps. Roy does videos on BMNR. We both talk about it quite a bit. And so definitely make sure to check out more content from that perspective. Okay, do we want to do questions or what?
Yep.
All right. Roy, what are your thoughts on HOVR? They're an eVTOL company based out of Canada.
So I'm aware of them, but I don't know anything about them specifically. Archer and Joby are the ones I know a bit better. But I don't know. It looks like eVTOLs are gaining a lot of interest, and I think maybe they are going to be a real thing. I don't know that it's going to be winner take all. I like Joby actually here a lot better than I did my initial look. But Hover, I don't know. Only thing I would say that would give me pause is Canada, but.
Isn't the Archer the one that partnered with Palantir, not Joby?
Yes.
So why do you
Give
like
me Joby over them? Well,
Really?
yeah. I saw some kind of sketchy things. Not anything illegal necessarily, but that I didn't like about Archer's communication and also what their leadership was saying. And leadership is a big part of my investment thesis. So, Jobin, the CEO of Joby, like as much as I make fun of him, I think he's very credible and he comes across as that. And then their engineering stack is incredibly vertically integrated. They have the best engineering, I think, by far. What I doubt as far as for Joby is their ability to scale, because that's a very hard thing to do. They did partner with Toyota, so that helps them there. I don't know who Hover is partnered with. I'm sure they partner with someone else as well. There will be multiple winners in the space, but scale is the hardest thing to be able to pull off on these. And whoever does that successfully will win.
I want to answer this so bad, but I'm not gonna, because I'm gonna be in a vlog by the end of the night if I do.
The real reason is they don't appreciate Tevis's investment advice, so they drive him to go and be the investment advisor of the Vatican. So they're lost.
Oh man, my mentality so does not align with the ethos of this country. It's like I'm meritocracy to the max, and that's just not something that is valued in a lot of places that are not the US. And this is why, Brock, we have our deal, which you have to hold up your end, man. Nala, where are you? Ban this man. Thoughts on Sofi announcing expansion in Brazil and its impact on Nubank?
I wouldn't be concerned for Nubank at all. They are a very incredible product, which has choked out the competition. So I didn't catch the Sofi announcement though, so I'll have to look into that.
They're expanding. They said Brazil is going to come after. I believe they said Brazil is going to come after Mexico for the payments.
Oh, for remittances then. Okay, so they're not operating as a bank there. Oh, yeah, Nubank it does remittance work, but it's not really developed, at least between here and Brazil. So I wouldn't think too much of that. That's a small part of what Nubank is anyway.
Wow. Look at PayPal, January 17, 2027, 125, 130 spreads, less than 25 cents. Wait, no, that's not a big spread though. That's only $5. It's
not a big spread, yeah.
Why would I only open for $5? Because it's less than 25 cents?
I don't know.
I'll take a look, Osiris. Thank you for the heads up. Yeah, I mean, look, I think SoFi is going to expand internationally. And that's just a part of their growth plan. I don't know about the impact on Nubank. I think Nubank has a very strong foothold in Brazil. Like, I love it when people ask these things. It's like it's either one thing or another. Like, man, the market is more than big enough for more than two players, right? Like Nubank is already competing with other institutions in Brazil. SoFi coming in is not really going to have a big impact in the grand scheme of things. So that's my thoughts. Where are my mods? Yeah, I don't know where they've gone. If somebody wants to be a mod to ban these bots, then that's great. Just let me know. Why is BMNR a trade for me and not long-term? We've talked about this a little bit in the past, but basically BMNR is a leveraged bet. And if we do have crypto winter, or when we do have crypto winter, it's going to fall disproportionately. And I also own Ethereum outright as well. So, so that's like my long-term buy and hold pick. And that's why BMNR is something where I want to ride it up on the seasonal tailwind, let's say. And I don't want to be there for crypto winter when it sort of falls, because I can just hold Ethereum. Why would I hold a leverage bet?
Yep, exactly the same for me.
Right? It's like saying, oh, we're heading into a recession. Why are you selling your call options? Well, you want to buy call options on the way up, not on the way down. You're going to have time erosion on them.
And you can hold the shares through that, but not
exactly.
calls.
Exactly. Have you both considered the downstream effect of the economy, consumer spend? Is he talking about like the government shutdown, or what is he talking about?
I think so. Yeah, I mean, if the shutdown continues, I think it'll probably pass the House, but we'll have to see. Yeah, there's downstream effects. Lowest income folks get hit disproportionately already, just because of SNAP benefits and some other things. But yeah, there's trickle down stuff.
Yeah, I mean, they're voting on it tomorrow, right?
I thought it was today.
It's tomorrow at 4 p.m.
Okay, thank you.
So Osiris says, if you think PayPal is going to be 130 by 2027, you're going to get a huge return instead of buying $100 calls. 4K is going to give you 96K. That's insane.
Yeah.
I mean, interesting. Do you think PayPal is going to be 130 by 2027, right?
Yeah.
Well, do you like 96K?
Nah.
Nah.
Money. Nah.
Yeah. So again, I think if the government opens up, well, even if when opening up the government, I think they're only going to make it till January 30th. So like come end of Christmas, we're going to be back in the situation all over again. And I think if they do approve it till January 30th, like the market is not going to be able to fully rebound because there's still that uncertainty looming. Like last time they punted it for what, 3 years, 5 years, something like this. And they just like raised the debt ceiling and just open up the government. But if they only do it temporarily as a stopgap, like the market's not going to find any solace in that.
Yep.
Okay. What has to happen for international expansion for Sofi?
I mean, they mention it at the fireside. Did you listen to the fireside yet, Tevis?
Not all of it. I've listened to bits and pieces. What I'm hoping to do is record myself listening to all of it and then just clip out the parts that are boring and just make a video of the parts that are interesting of me reacting. I might do that after this.
Sure.
Or I can just do a live stream, honestly. But have you listened to it?
I read through it. So yeah. Here's him mentioning international. So we can do international remittance now. We can do ACH and so forth. Oh, that wasn't it. There was a he mentioned leveraging or using the stablecoin product that they're coming out with internationally, but I'm not going to find that. It's hard for a bank to go international. That's one of the reasons why I like Nubank as an investment, because they've been able to do that. But a lot really have. I don't know that they can as a bank, but they sure have as a tech platform already. So they can leverage that internationally.
Yes, we did talk about Duolingo. Just rewind for that. We talked about Duolingo right before we talked about BMNR, and right after we talked about the Burry short for NVDA. Next question. Yes, we talked about BMNR, and right after we talked about Duolingo, actually. Do you think Sofi could reach 60 by end of 2026? Roy thinks it could reach 65. Isn't that crazy?
Yeah.
Roy, where do you see Palantir going in the next 12 to 18? Isn't it worth trimming to get a better return somewhere else?
I think the exact same argument could have been and was made last year, and we see where Palantir is now. I'm not expecting any price accumulation over the next 12 to 18 months, but I've already had a lot, and I've taken a lot of gains. So I'm okay leaving it. It's my fourth largest position as it is. It's one of those where I'm not investing for the next 12 to 18 months. If I was, yes. I'm investing for the next 12 to 18 years. And so Palantir is one of those, I think, elite generational companies that I always want to own a part of all the way through, as long as they continue to execute. And they certainly have in abundance. So I will continue to hold what I have unless I need the money for something else. Real life situation comes up where we need a lot of money. Yeah, Palantir and everything else is on the chopping block. But otherwise, I'll just hold.
Yeah. Brock says his question was in relation to the estimate of $1,016 per ACA marketplace increase of premiums as of January 2026. That's a significant amount of discretionary consumer spend coming out of the economy.
Yeah, no, he's right.
Is that concerning to you, that it's that much coming out of the economy?
Yeah, I mean, I think that would be divided by 12 and you need to pay that in installments. I could be wrong on that, but so it's not really that significant of a hit, at least all at once. People continue to spend until they can't. And I don't think less than $100 a month would stop people from spending the way they are.
Would they even pay it in the same year, or would they defer it further out?
I'm not sure how that works.
Yeah. Are you guys local investors? I am not.
No, I'm in too many payment and fintech companies. So,
Sagig asks about BMNR. Can you discuss the pros and cons of them staking? Won't staking mean to put the holdings at risk? Would it be worth it for us investors? They take that risk.
No, them staking or acting as a validator, it doesn't put any of the Ethereum at risk. It's just has to be there. If you want, like the one disadvantage of it is you can't usually loan that out. Maybe you can, but it's not as straightforward as if it's unstaked, and you can't sell it until you unstake that. And to do that, there's usually a queue, both waiting to enter in and also exit. So, but it's yield. Like that's the advantage right there, is you're making around a 3% yield APR. So why not?
Well, let me tell you why not. So I think one of the benefits of them not having staked so far, obviously the drawback is that you don't have that yield. And I think Tom Lee said that they can even get higher than 3%. It's probably a decimal spot, or like they can get maybe 4%. But the downside of it is that you're not getting that yield because they're not staking yet. The upside of it is that they can essentially, they want to stake when they reach that 5% target. They're still in accumulation mode right now to buy up their target. So we want to see what the roadmap is with staking, not necessarily to have them stake right now. I think they also benefit from the price of Ethereum remaining depressed for a long period of time because they can purchase for cheaper. So there's also that to consider with them being fully in accumulation mode. I think staking is absolutely the plan going forward. But we'll have to see. I think they only are going to start having that conversation once they get close to having 5% allocation. Staking is securing, then the great treasury would prevent being slashed. The burn dividend is 3 to 4%. Dilution seems to hit everybody, so I don't know if BMNR is in danger there.
I mean, if they're worried about dilution, I don't think anything's changed. So, yeah, the burn rate is such that since the end of 2022 through now, the Ethereum supply has essentially been stable. So,
yeah. S&P right around the corner after staking. All that staking revenue goes to the bottom line. Yeah, Tom Lee has hinted at using staking to provide a dividend. I think this is going to be really interesting because if, let's say, they get 3% yield or 4% yield from staking and they say 1% is going to be a dividend that's paid out monthly, or yeah, why not monthly or even quarterly for that matter? Like that's going to be really compelling value prop for BMNR versus me holding an ETF, for example, right?
yeah.
So that could be really interesting to attract more investors in.
They could even do weekly dividends.
Yeah, and so this is why I said it's a flip side with regards to staking, because if they stake and they have 5% of the total supply, then that will be locked up and the price can go up. Like it's just less out there to be traded essentially. But right now they benefit from having a lower price because they're still in accumulation mode. So I think this is one of the reasons why they haven't staked already. I don't know, Roy, if that makes sense, but 5% of the total supply is a big amount, man.
It is, yeah.
So,
yeah. I mean, it is a concern, but I think that we're so far away from that. It's a little bit premature to be focusing on it.
yeah, so that answers that question. Have you guys been writing covered calls on BMNR? Yes, but not lately.
Carefully for terrible premiums because I want to be careful.
Yeah. I think if we pump on BMNR 1 day or 2 days in a row, then I'm going to be writing covered calls again. But right now at $39, $40, it's not really worth it. I was looking to go out a month and write like $60 calls, but that wouldn't be a lot of premium. And yeah, I don't know. Have you thought about looking into XRP? No.
Not really. That's a Steve thing.
Yeah. I'm not super interested in XRP. How low is BMNR going?
At least below 40.
Well, I mean, let's take a look, right? So let's take a look. So
realistically, unless you think that Ethereum is going to go below 3,000 again, probably not too much lower, but it's possible to go some lower.
Yeah, so BMNR has $12.6 billion in Ethereum and $15.5 billion in market cap. How low can they go? They can fall another $3 billion, which is another 5%, basically. Did I do the math right? Probably not.
I don't
know. No, another 20%. 20%. Sorry, guys. Another 20% is how low they can go. So they can fall another. It's at $40. 20% is $8. So they can fall to $32, basically. Is that scientific enough for you?
Yep.
They can fall to $32, and at that point, they would be worth 1-to-1 with their NAV, meaning that they would be worth exactly the amount of Ethereum that they have on their holdings, and not a penny more. I don't think they're going to fall to $32, but if they do, then I wouldn't be like, I could now if they fall below $32, then at that point it's just like, dude, this is free money because they're under their NAV.
Yep.
Yeah, so you guys got to watch me struggle with basic math.
Travis math.
Yeah. Outside of selling calls and puts on BMNR for swings, are you looking at spreads as well? I know Chris has some, but I can't imagine what those are looking like right now.
I have some vertical spreads. I think that they're a little bit underwater, but they're close to even. But most of mine are just shares.
Yeah, I also have spreads for 2027. They're $70, $100 spreads, which are very underwater. They're like maybe 30% underwater, but they're for 2027. So I think if we go back to $60 on BMNR, then those are going to be like good again, like in profit again. So I'm not really too concerned about those. But yeah, similar to Roy, most of my position is in shares. Let's see. Do you feel comfortable sharing which brokerage you use and why?
I mostly use Robinhood. I do have a Webull account as well. I just find them really easy to use, straightforward. Robinhood gives me all the access I need. I like the matching bonuses with gold. I think it pays to be a gold subscriber for them. And yeah, the interface is really easy too. So, but Webull has, some really good charts, and their watch list and everything's really nice too. So it has a nice desktop app.
Mm-hmm. I like interactive brokers personally, but I don't have the options that Roy does because, again, I am not in the US and A.
Third world.
Exactly. Yeah, I'm on East Berlin side. All right. Anything else to talk about, Roy?
No, I think that is a wrap.
Thank you, everybody, so much for watching and supporting our channels and our content. If you are not already following and you do like our quirky yet lovable humor, please consider following and subscribing. Consider becoming a member. And the people who did become members today, the 15 or so people, check out our members only content. We're building up quite a library now for members only. And we will see you, Roy and I, next week. Yeah, last second ad. I snuck it in.
Yeah.
Thank you for the 12 cents. We'll see you guys next week. And thank you for the $10.12 that I earned this pod. Thank you, Brock. Really appreciate it. And maybe there will be a choice fruit. Maybe not. You guys are going to have to wait and find out. Next Tuesday, 6 p.m. All right. That's it. I don't know what else to say. Goodbye now. Roy, say bye.